The most bang for your buck for life insurance, the most insurance that you could purchase or secure for yourself for the least amount of money is going to be term insurance. You will cover a certain term of time, 5 years, 10 years, 20 years, 30 years, for a set dollar amount, almost as if you're renting the life insurance. If you live longer than the term, you won't get any of your money back. But if you died within that term, the insurance company contractually will pay your beneficiaries the stated death benefit. Well, we got to figure out how much the whether it's the family or the charitable organization, whomever's going to receive this insurance death benefit, we got to figure out how much we're looking to transfer to them at your death. How much it's going to cost is going to be a function of the type of insurance that we try to secure, and it's also going to be it's going to be a function of the health of the individual that we are insuring. The healthier an individual is, the less it will cost. The older an individual is when they apply for insurance, the more expensive it could be. The number of medications that a client is on could sometimes dictate how expensive life insurance can be. And the type of insurance, whether it's term or permanent insurance, that also dictates the cost of the insurance. A lot of times insurance does not work. And the reason it doesn't work is that sometimes someone will buy term insurance thinking that their family is going to be rich when they die. Well, the problem is that the term expires and the individual is still alive. If you don't die within that term, whether it's 5 years, 10 years, 15 years, the insurance company doesn't have to pay out. It's one of the reasons insurance companies make a lot of money. They collect all these premiums, all these payments from their clients over the years, every month, paying into life insurance for that 10-year term, that 15, 20-year term you may have heard about on TV or read about perhaps in an article. Very inexpensive, very cheap insurance to buy. Rarely does it ever pay out. And the problem is that it doesn't pay out at the time that you need it most. When you're old, when you're ill, when you're diagnosed with something, at that point you're uninsurable and you can't buy insurance. So structuring insurance early on with the mindset as to what is the end of this going to be, that typically yields the best results for our clients and solidifies their financial plans. Insurance can get very expensive if you wait. That's one of the biggest hurdles that we run into when discussing life insurance planning with our clients. They always say, well, we should have done this 5 years ago. We should have done this 10 years ago. Look how expensive it's gotten over the years. Every year that you get older, insurance tends to become more expensive. Every time you go to the doctor and you're prescribed something or they find something on your charts, you're one step closer to becoming uninsurable. So what we like to do is have that discussion of how much within your financial plan, how much you're going to allocate towards life insurance planning and show the difference between allocating those dollar amounts now or allocating those dollar amounts 5 years or 10 years from now. And generally, the longer you wait, the more money is going to be required to be placed into the life insurance policies. And that's if you're even insurable later on in life. So the best way to approach it, start early, fund your life insurance policies, pay off your life insurance policies if you can structure them that way early on, and then use your savings and your cash flow later on to fund your retirement, fund your savings, and build more wealth that way. When clients come into my office and talk about term versus whole life versus permanent versus universal, it's a conversation that it always goes back to, why are you buying insurance? If you want to save a lot of money and buy the cheapest amount of insurance, go with term insurance. It'll only cover you for a certain amount of years, and if you don't die within that time frame, all that money's flushed down the toilet. Fortunately, term is generally significantly less than permanent insurance. But if your goal is ultimately to invest money into a life insurance policy so that it pays out to your family, to a charity, to an organization, perhaps to your business partners or other owners within the structure of your company through a corporate-owned life insurance policy. That is where permanent insurance, whether it's whole life or universal, that is where these policies come in. We've had examples and a lot of success where we transfer money into permanent insurance policies, cash value policies, $5,000 a year for 10 or 15 years. When those funding periods end, when the money is transferred into the life insurance policy, those life insurance policies can sustain themselves with no future premium payments till clients are 90, 100, up to 120 years of age. Those dollars that were placed into those life insurance policies will pay out to the beneficiaries, unlike term. And remember, the term, they're generally suited for specific needs until your mortgage is paid off, perhaps until the date that you retire or reach Social Security or the age that you can receive your pension or become eligible for Medicare. At that point, you might not need the insurance, and that's a good reason to own term because it will expire at that point. But if your intention is to leave money to family, business, charities, it's more difficult than that, and that's where a conversation comes in, where we can discuss the pros and cons of both insurance policies, both types of policies, figure out where you are budget-wise, and make a smart decision for you, your money, and for those that you're trying to take care of. The way that we choose what type of insurance policy and the strategy that we're going to be utilizing with this insurance planning, it generally starts with a conversation with the client. We need to know whether or not the client's insurable, who they're trying to insure, what their monthly budget is. Is this a business venture where the business owners are going to be the beneficiaries of the policy, or is this going to be something within the family where we're structuring the policy to pay out to the family at a certain point? Is this covering a mortgage? Is it covering debt? These are all of the questions that we have to understand from the client's viewpoint in order to make a recommendation as to not only what kind of insurance the customer should be looking at, but the ownership structure, the beneficiary structure, and the payment structure that we're going to employ for the life insurance coverage. We'll use the example of Grandma Beverly. I was at a financial planning summit in Kansas years ago. They gave this example, and it stuck with me. So Grandma Beverly has some money. She wants to give it to the family, but only after she dies. She doesn't want them to have the money now. She wants it after her death. She has three choices as to how to invest the money. She doesn't want to pay any tax on it. She wants to make sure she doesn't lose any of the money. And she wants to maximize the amount of money that her family receives. Will CDs be the answer? Probably not. CDs will protect the money, but she'll have to pay tax on that interest each year, and it's not going to maximize the amount that goes to her family. CDs barely pay any interest these days. Second option would be stocks. If she lives long enough, stocks could generate a decent return, maximize the amount of money that is left to her family, but she'll have to pay tax and owe tax on her account, dividends, capital gains, interest. Grandma Beverly's going to pay the tax and foot the bill for those each year, and there's no guarantee that those investments are going to appreciate. The market could dump in the year Grandma Beverly dies, and if it's $50,000, it might be worth less. So it doesn't necessarily maximize the amount, and it doesn't necessarily protect the amount either. Then there's life insurance. Grandma Beverly considers life insurance, if she's insurable, that $50,000 may be able to purchase $75,000, $100,000, $200,000 worth of coverage and worth of death benefit for her family. It would be tax-free to Beverly while the money sits in the life insurance policy, and tax-free to her family also, as they will be the beneficiaries of life insurance policy. Again, the leveraging how much the $50,000 could be worth, it's a function of Grandma Beverly's age, her health, medication she's on. So we like to have these discussions with our clients to see if there are better scenarios than simply investing money if the ultimate goal is to pass it on to the next generation. Life insurance doesn't have to be for your family. Life insurance could be to take care of your final expenses and the cost of your funeral. Life insurance can help those you leave behind take care of your bills, or life insurance can be left to charities and organizations that are special to you. If you have money that you know you want to leave to an organization, perhaps it's sitting in CDs, perhaps it's sitting in bonds, mutual funds, stocks, you may want to consider life insurance as a holding tank for those assets. If you're healthy and you're insurable, life insurance can leverage those dollars, can take those dollars from $10,000 to $100,000, or perhaps from $50,000 to $500,000 or $1 million. It depends on underwriting. We'd have to go through those numbers. But life insurance is an excellent way to leave a legacy behind, to protect your assets, and to give a gift to those special organizations in a way that can make a profound impact on their future. Life insurance is a special conversation that I have with my clients. Everyone looks at life insurance, everyone looks at money a different way. And the more that we can discuss and understand what your vision is for your money, for your dollars, what your hope is, what your mission is to protect your family, those special organizations, the more I can understand that, the better I can help you. To set up an appointment, call my office, visit me on my website at barrafinancial.com, or send me an email. I'd be happy to spend some time with you and have a discussion about your future.